What if you had invested in Amazon when it was just an online bookstore? Just imagine the fortune you would be sitting on today. But since that opportunity is gone, I'm sure you would love to find a similar one, right? However, the real question is, how do you spot the next Amazon before it takes off? Well, in today's video, we are unlocking the secrets to find the next billion-dollar company before it skyrockets. We're going to reveal the signs, patterns, and strategies that you can use to identify the next game-changing stock before the rest of the world catches on. Knowing how to spot the next Amazon can literally build generational wealth. So stay till the end to unlock your future with us. A clear mission. Most great companies have leaders with a clear, ambitious vision. Let's take Jeff Bezos, for example. He did not just sell books, he successfully built the most customer-centric company in the world. Similarly, Elon Musk also did not just create Tesla to make cars. He aimed to revolutionize transportation and accelerate the world's transition to sustainable energy, and he successfully did it. In order to find the next big catch, you have to look for founders with relentless drive, ambitious missions, and a history of overcoming challenges. Their passion fuels innovation and long-term growth. If they have previously built successful ventures or a strong background in their industry, it's even better. Visionary founders don't just chase trends, they create them. Problem solving. The next thing you have to look for is the problem-solving skills of a company. Game-changing companies address huge, widespread problems that affect millions, if not billions, of people. Amazon made shopping more convenient, while Tesla is tackling climate change. And even Airbnb disrupted the hotel industry by providing an alternative to expensive accommodations. So, when you're looking at a company, ask yourself if this company is solving a problem that millions or billions of people face. If yes, it definitely has the potential to scale. So, start looking for industries that are ripe for disruption, sectors where inefficiencies exist, and customer frustration is high. If a company is introducing a solution that dramatically improves efficiency, lower costs, or enhances the consumer experience, it definitely has the potential to be the next big thing. Signs of hypergrowth. You know how successful companies don't just grow, they literally explode in popularity. Before Amazon dominated e-commerce, its revenue was growing at an exponential rate year over year, fueled by customer demand and aggressive expansion strategies. So, in order to find the perfect company to invest in, you have to keep your eye on a few key indicators. The first one is fast revenue growth. You have to see whether the sales are increasing significantly each quarter. Then you have to see the expanding user base. You can check if more people are adopting the product or service rapidly or not. Of course, industry perception is also important. So, you have to check whether media influencers and experts are taking notice of the company or of the product. And then, of course, you have to look at the rising market share as well. You have to make sure that the company is capturing a larger share of its industry. Effective monetization and reinvesting. But not all high growth companies survive. The ones that thrive have a really strong, scalable business model that allows them to grow profitably. While many startups burn cash to acquire customers, truly sustainable companies find ways to monetize effectively and reinvest in their own expansions. So you have to look for companies that have high gross margins and generate recurring revenue, maybe through subscriptions or membership. Then you also have to check if the company is reinvesting its profits into innovation and expansion and whether the company is showing signs of improving profitability over time. Such companies often have a clear path to long-term sustainability, tech-driven goals. Considering how AI is ruling the world, the next Amazon won't just improve an industry. It will probably revolutionize the world using technology. Just think about it. AI, blockchain, robotics, quantum computing, space exploration. There are so many opportunities. Companies that leverage groundbreaking technology to create new markets often become industry leaders. So you can identify companies leveraging breakthrough technology to redefine industries. You can look at their AI-powered customer service, self-driving vehicles, fintech disruptors, and even biotech breakthroughs. If a company is pioneering a technology that makes its existing solutions obsolete, it's definitely worth watching. Customer obsession. Remember when Amazon had just started? Its motto was to start with the customer and work backward. So companies that prioritize customer satisfaction and continuously innovate based on feedback tend to win in the long run. If customers are consistently raving about a company's product and service, that's a very strong indicator of its potential success. So make sure to read customer reviews, check social media sentiment, and see if the company is constantly improving its product based on feedback. Look for high net promoter scores and signs of strong word-of-mouth marketing. The right timing. If it's too early or too late to invest, Sometimes even a great idea can fail. Let's take Amazon for example. It boomed because e-commerce was taking off at the time. That was the right timing for Amazon. Now, timing can be the difference between a company thriving or fading into obscurity. So always keep analyzing market trends. Check if there's a growing demand for the product or service, whether consumer behaviors are shifting in favor of that product, and if there's a regulatory environment that is supporting the product's growth. A company that rides the wave of an emerging industry at the perfect moment has a much better chance of long-term success. Adaptability. Companies that dominate long-term can pivot when necessary, like Netflix, which started with DVD rentals before transitioning into streaming. Amazon went from books to global e-commerce and cloud computing. Having the ability to adapt to changing market conditions is very crucial for a company's sustained growth. So, you have to watch how a company's leadership team reacts to challenges. You have to check whether they are innovative or if they have a track record of successful pivots. Keep checking whether they have made bold, strategic moves that paid off. Companies that remain rigid in a changing world often fall behind, while those that embrace innovation stay ahead of the curve. Stocks to buy right now. Now, if you are looking for some solid stocks to buy and hold them for the long term, then the Enterprise Product Partner, or EPD, and Brookfield Corporation, BN, are two top-tier options. These companies are currently offering strong financials, durable business models, and even long-term growth potential. Enterprise Product Partner is currently one of North America's largest midstream companies specializing in transporting oil, gas, refined products, and petrochemicals through an extensive pipeline network. The company is playing a crucial role in the U.S. liquefied natural gas market, benefiting from growing global energy demand. Unlike traditional oil and gas companies that are heavily impacted by commodity price fluctuations, EPD generates its revenue primarily from transportation and infrastructure services. Boasting a yield exceeding 7.5%, it is an attractive option for income-focused investors. On the other hand, Brookfield Corporation is a global asset manager specializing in infrastructure, real estate, renewable energy, and private equity. With over $850 billion in assets under management, BN is a powerhouse in alternative investment, holding controlling stakes in several publicly traded partnerships including Brookfield Asset Management, Brookfield Renewable Partners, and Brookfield Infrastructure Partners. Its diversified portfolio provides exposure to high-quality cash-generating assets. Both EPD and BN are top stocks to buy and hold, offering unique advantages in different factors. While EPD remains a top choice for income-focused investors, boasting a 7.6% dividend yield and a track record of 25 consecutive years of distribution increases, its fee-based midstream model provides stability as 80% of its revenue comes from long-term contracts, insulating it from volatile oil and gas prices. Additionally, EPD has $6.4 billion in expansion projects lined up, ensuring future growth and cash flow stability. Brookfield Corporation, on the other hand, is using a capital recycling strategy where it sells mature assets to reinvest in higher yield opportunities. It has consistently delivered 15 to 20% annualized returns over the past 2 decades. Both of these stocks provide solid grounds for income stability and capital appreciation potential. So if things go right, they definitely have the potential to be the next Amazon. Now you have the tools to spot the next Amazon before the world catches on. And remember, opportunity waits for no one. So make sure to take action before the hype. If you found this video helpful, make sure to subscribe to our channel so that you can stay in the loop and never miss out on any of our videos. Subscribe now. See you in the next video.